All right, everyone, we are here at the 2015 Cambridge House Investment Conference. Joining me now, Mickey Fulp himself, the mercenary geologist. All right, Mickey, 2014, interesting year for resources, and you've said before that when gold's performing, the resource sector follows. So what was this year like for gold and for the resource sector?
Well, gold didn't perform very well last year. It started the first half of the year doing okay, and then here came July 11th, and the U.S. dollar started going up, and of course gold went down in U.S. dollars. So normally we see a rally post-Labor Day. It didn't happen. In fact, the market cratered post-Labor Day. What we have seen in 2015, actually starting about mid-December, is the dollar index is going up and gold's going up, and I think that's very positive. Yeah. The last time we saw that happen was in January and February of 2009, as our industry led out of the global economic crisis. So I'm encouraged right now.
We had an interview with Frank Holmes about a week ago, and he talked about how gold had the worst sentiment as a resource last year, but it was only down 2%. Why do you think that was?
Well, that's true. It was only down 2%, and other precious metals were down considerably. Silver was down, if memory serves, about 18%. Platinum was down. Palladium did well, 7%. But, you know, we're still dealing with a negative perception of the gold mining industry, and it's well-deserved. The gold miners have performed horribly. They have not rewarded shareholders, and until that turns around, our little junior resource sector is not going to be doing very well.
So in your opinion, what are the biggest forces affecting gold right now? Is it oil prices? Is it, you know, kind of the negative sentiment around it? You know, there's been a lot of protests, a lot of concerns over resource development. What do you think are the biggest forces this year?
Well, for gold, you know, it's basically supply-demand fundamentals, and it's bifurcated between a paper gold market, which is much bigger than physical gold market. We still see very strong physical buying, especially from China and India. But the perception is not always what's really going on in the market. What we need for the gold miners to do is reduce costs and start to perform for investors. Then we will see a trickle-down effect to the micro-cap junior business.
So we know gold isn't your favorite resource. What resources are you paying attention to this coming into 2015?
Well, I'm a contrarian, so copper beaten down right now leads me to think there's some buys in copper space. I've been buying select oil companies. You know, I like to buy things when no one else wants them, because then I get my bargains. And, you know, the cure for low prices is low prices. So these commodity prices, world demand remains strong except for oil, but certainly for copper, and so from that point of view, I would think that it might be time to pick up some copper stocks.
Wonderful. So we're here at Cambridge House Investment Conference, all about resources. As first-time investors, what are you telling them to encourage them to pay attention to the resource sector?
Well, if you're in the junior sector, you need to pay attention to share structure, tight share structure. You want management that has been in the business for a while. Usually technical guys are best, geologists and engineers, but they have to have had success and not a bunch of failures. You want a good project in a geopolitically safe jurisdiction. For me, that is increasingly the United States, perhaps Mexico, Chile, are my range of countries that I'm willing to put money into projects is very much shrunk because of ongoing resource nationalism. And finally, in a bear market, you need to have a kitty. You need to have cash, or you need to have some ability to raise cash without severe dilution. Companies with strategic groups of investors are good. Perhaps alternative means of financing, strategic alliances. There's various resource streams, royalty streams, et cetera. So there's various ways to do this without dilution, and that's really the bane of juniors, is diluting themselves out beyond relevancy.
I think it's kind of a favor to us, right? I mean, it's a tough market, so if you're going to survive, you got to have good management. You got to be spending your money smart. So now, you know, there's great companies out there that really know how to survive through this hard time. What companies are you specifically paying attention to here at Cambridge?
Yeah, I cover 3 companies right now. VRIC Minerals, Prospect Generator in Europe. I cover Brazil Resources, a gold explorer and developer and acquirer in Brazil. The thing interesting with them right now, they have a Southwest Athabasca uranium play that I think they'll spin out, so maybe that's a 2-for-1. And then Uranium Energy Corp, I cover that. That's an ISR producer of uranium in South Texas. All those companies are sponsors of my website, and I remain committed shareholders. So I'm financially involved, and of course I'm biased.
Of course. Well, thank you so much for joining us again. It's always good to see you. Last time I was with this guy, we were out on a fishing boat, and I think I might have caught a bigger fish than you.
Yeah, I don't quite remember. I know we had fun on the boat, and we shot a video, and let's do that again sometime.
Yeah. I'm just kidding. I didn't catch a bigger fish. Thanks so much for being here, Mickey. We'll see you soon.
Thanks a lot, Hannah. My pleasure.